Yesterday, I shared with you four major events that is going to happen here in September and could potentially push this finally to pop once and for all and get us to the moon. Even though we have to look at this with a big grain of salt because this is just speculation looking at those events. But well, guys, I have another one that just added to the list, and I shared that with you earlier today, and it's about SEC chairman actually coming up officially and out telling to the public that we are looking at banning once and for all payment for order flow. Guys, please hear me out because this has a lot of implications when it comes to AMC and a lot of other highly shorted stocks in the market right now. Okay, because these, as I mentioned, just hear me out and listen to me for just few minutes. When you look at what actually he said on Market Watch, you have much more details coming from what Reuters or other news outlet may have said today. Well, this is really a big advancement because this is a controversial practice that has made billions and billions of dollars to brokers and HFT, high frequency trading firms like Citadel, a lot of millions over the years. And right now, the SEC is saying that we are going to have a full ban of this payment for order flow. Full control payment for order flow. He said, Gary Gensler's practice as an inherent conflict of interest. The market makers make a small spread on each trade, but that's not all they get. They get the data, they get the first look, and they get to match off buyers and sellers out of that order flow, which is definitely problematic. And that's why we've seen stocks like AMC and GameStop not actually going to the moon as they were supposed to. All right. Now, when you look at this, he also mentioned something that I continuously said on my videos. UK, Australia, and Canada also forbid payment for order flow. And last week, Australia said we are looking at toughening and restricting rules around payment for order flow. So making it even difficult for brokers and HFT high frequency trading firms to actually implement. So it's a strong signal. And the guy said, man, I'm getting inspired by those because there is a reason why these other major markets outside of the US are having this forbidden. Okay, so he replied, I'm raising this because it's on the table. It is very clear. Now, this is not the only shocking news. The other news is also on the table is how do we move more of these markets to transparency. Transparency benefits competition and efficiency of markets. Transparency benefits investors. So we know that a big announcement like this is going to have some pushback, and that's why I want to be realistic for a second. I'm excited. You can tense, you can feel that, right? But in the same sense, that Robinhood just came public, and Robinhood has 80% of their profits coming from payment for order flow. And the reason why I'm expecting a pushback is because Robinhood is working hand in hand with Citadel. But the thing is, even Robinhood, a couple of months ago when they went public, they mentioned this as a risk factor to the investors willing to put their money into their company. And they said, well, internally, we are not expecting this to be a thing. We're not expecting the SEC to crack down and ban completely payment for order flow because, 80% of our entire volume coming from payment for order flow, it's definitely a big portion of the revenues of Robinhood. So if tomorrow that is no more existing, the valuation of the company is definitely taking a big, huge shock. So what we're looking right now at maybe the $43 a share can potentially be at least 50% of that. So that's why I think the Robinhood investors right now should definitely pay close attention. I mean the retailers, because we all know how it ends with the corporate and institutional on this. But let's see how these things will start moving for Robinhood in the coming the next market trading sessions. But back to this point, guys. The fact that he's one official, not only is willing to retire, I mean to reiterate and bring back market transparency, the market structure, and conflict of interest through on top payment for order flow for retail orders, it gives me two major takeaways. So first of all, it means, as I mentioned also many times here, the SEC has a strategic way of doing things. They just don't, speak without having a solid case built out. So that means when you hear things like this, it's because they're actually already been looking into this for several months. And I can bet you that if things goes as they're supposed to, it's gonna take effect very, very soon. The next thing is, we all know how payment for order flow has impacted the volume going into AMC, because as I mentioned many times, these should be trading at least, the very bearish case, $500 a share, if not 1,000, if not 5,000. Why? Because this is a stock that is owned by millions of retailers over the world, but it's still shorted over the entire existing amount of shares in the market. How is that even possible if it's not criminal and illegal? So once payment for order flow goes out of the picture, guys, we can expect definitely a major move in the price, because those orders will not just disappear. Just orders that were parked are not just going to disappear. That's why we've seen some glitches, $11,000 the price, $5,000 the price, 8,000, 4,000, 2,000, so it's just a matter of time, guys. But keep in mind, he said that the staff is going to be working and come up with a proposal in the next coming months. So this is not something that's going to suddenly happen tomorrow, but definitely it's a big momentum. It kicks a big momentum to the stock, in addition to all the other events, all the other catalysts that we already knew is going to come, especially here in September. So sit tight, because things are heating up.